Hey, what's going on, everyone? Today is the 19th day of January 2022. I'm going to talk about a review process, a look back at a recommendation from Tom Nash. This gives us the opportunity to go back and see whether or not these YouTubers are actually giving us some good picks to hold for the long term. Now, you guys can see we're going to talk about Peloton today on this video. We're just going to simply look back and check the performance. This is no bashing. This is no hate. I'm just simply showing you the performance of what these YouTubers are picking in terms of great buys. I did take a little snippet from this video. We're going to listen to it, and then we're going to fall back and look at the history of this price movement in Peloton to see what actually went on. So if you guys appreciate my videos and my content like I do always, hit that like button, share the video, and also subscribe to the channel, because what I do the price predictions based solely off of the price chart. I don't look at anything else. I don't pay attention to no one else's recommendations. There's price targets, nothing. I simply look at what other people are doing with their money, strictly looking at the price chart. So if you guys want to join me, like I said, hit that like button, share the video, and also subscribe here to the channel. All right, now first, this video was posted about a year ago. Yeah, it was. It's still here on YouTube. You guys can see that I'm scrolling down on this video. You guys can see right here, February the 5th was when this video was posted. And he was talking about, even in the title of the video, this was a massive opportunity back in February 2021 to see Peloton continue to go up. Even in quotations, you guys can see it. I mean, parentheses. It's still undervalued according to this video. Now, what I'm going to do, we're going to play a little snippet of the video that I took from Tom Nash in regarding to why he thinks this particular market is a buy, and we're just going to break it down. We're going to dissect it. We're going to listen to what some of the other analysts in Peloton and see what they thought about it as well. So real quick, let's go ahead and take a listen to see what was said on this video.
Okay, so is Peloton a good purchase at $146? In pre-market, Peloton fell to $146 today, even though they had a phenomenal quarter. Yes.
You see that right there? He stated that the market in Peloton fell 7.25%, even though they had a phenomenal quarter. This is one thing we all need to realize about when we come into the stock market. The market doesn't care about phenomenal quarters. If you guys can understand, the price dipped here in pre-market 7.25%. But according to Tom, that was phenomenal. They had a phenomenal quarter, but the price still fell. You got to ask yourself these questions, because obviously the market doesn't care about phenomenal quarters. Let's continue to listen.
Today they released earnings. A quarter was phenomenal, and yet they pulled back by over 7% to $146. Now, is this a good opportunity to buy? I personally think that it is. And in this video, I'll share with you why I think that's the case.
Okay, so you heard him right there for yourself. He felt like this was a good opportunity to come in and buy Peloton stock. Cool. There's nothing wrong with that. I mean, matter of fact, you're supposed to come in and try to make some predictions as to what you think about a particular market. Well, back in February, you know, Tom was looking for the price to go up. It was undervalued according to him. I mean, he felt that the phenomenal quarter that they had then was out the park. Price was undervalued due to that, because price should have went up according to what his thinking or his logic is. So let's see what else happens.
I know a lot of people are hating on Peloton, saying it's overpriced. I see the vision, and I just want to share with you my opinion. And by the way, this is not just my opinion. Jason Helfstein, by the way.
Now he goes in and he tries to justify his opinion with another analyst, right? Now, you guys can see from this screenshot right here that Jason also was following Peloton. Yeah, he was. Now, what I'm going to show you is that one thing about this history is that we can always go back and take a look at what was then to what is going on now, right? So look at this real quick. You guys can see from Tom's screenshot, the screenshot that I have on my screen right now, that Jason had a whole lot of buy ratings, right? You guys can see that. He had a whole lot of buy ratings here on this particular screenshot. Now, you can see here as well that Jason, he had pretty good ratings, right? Take a look. His overall success rate was around 86% for Peloton. That was then, that was in February. What I'm going to show you now is totally different. Let's continue to listen to what Tom says first.
From Oppenheimer, who is literally ranked number 6 in the country out of 7,200 analysts.
So Jason, back then in February, was ranked number 6 out of 7,200 analysts on tip ranks. Let me show you the screenshot now. Let me move this out the way. Okay. So now, this is Jason's profile now, today. And you can see his success rate is now 57%. You can also see that his ranking increased to 93 out of being ranked 6 back in February. Can you guys also see back on this snippet here that his average return was at 48.7%? Well, today it is at 30%. Yeah. Okay, so listen to this again. Let's continue to go on.
Has a success rate of 76% and a 48% annual return, actually almost 49. Here's what he thinks about Peloton. So he gave it $185.
Look at that. Back in February, Jason, which is an Oppenheimer Wall Street analyst, gave Peloton a $185 price target then, right? Well, look at it today. Let me slide this over again. And I want to show you all, what is his price target now? Yeah, 140. A lot of these analysts follow the market. They simply follow what price does. That gives us no benefit. We need to have a way that we can get ahead of the game, that we can be ahead of the price so that we can profit from it. In February, he had a $185 price target. Well, today it's 140. And then even look at Tom. Look at the screenshot right here again. All of his buy ratings, you guys can see that the market continued to go up. Let's listen further.
As a target price, this should be higher than 17% since the pullback. So we're talking about $185. That's what Jason is thinking. And he was always right about Peloton. As you can see here, his history is actually very good.
Look at that. His success rate back in February was 86%. Well, look at it now. It's at 42%. So within 11 months, his success rate on Peloton has dropped down from 86% to 42%.
6 out of 7 ratings were actually profitable, and he made over 200% on Peloton, and he still sees upside all the way to $185.
So he made 200%.
Okay, so it's
right?
phenomenal quarter. Peloton saying Jason Helfstein, by the way, from Oppenheimer, who is literally ranked number 6 in the country out of 7,200 analysts, has a success rate of 76% and a 48% annual return, actually almost 49. Here's what he thinks about Peloton. So he gave it $185 as a target price. This should be higher than 17% since the pullback. So we're talking about $185. That's what Jason is thinking. And he was always right about Peloton. As you can see here, his history is actually very good. 6 out of 7 ratings were actually profitable, and he made over 200% on Peloton. And
so you see that he made 200% back in February on Peloton, but today what he's making on Peloton is at 59%. Yeah, see, this is what happens when you react to the price movement and not being proactive. This is being reactionary to the market, and we cannot be that way if we're trying to win in this stock, in the stock market, in this stock space. We cannot be reactionary. Back in February, yeah, he looked like a shining star. He was ranked 6 out of 7,200 analysts. He had a success rate at 86% in February, and he also had an average profit on the stock of 199%. Now, look at today though. It doesn't look as good, does it? No, because the price in Peloton has been decreasing, but yet and still he has buy ratings. Yeah, he has buy ratings there. Let's continue to listen.
he still sees upside all the way to $185.
There it is. So he is seeing $185 back then in February. And I want you all to look at this tip ranks right here again, right? You guys can see it. Following this video, when Tom posted it on YouTube, February timeframe, Jason still continued to issue out buy ratings. He continued to maintain his buy ratings. He reiterated here on June 22nd, 2021. He maintained it in August 2021. He also maintained it again in August 27th, 2021. And look at the price now. These analysts do not have your best interest at heart. Because if they did, he would have issued out a sell rating. Yeah, he would have. But instead, you see nothing but buys, nothing but buys, nothing but buy ratings. Ask yourself the question, why? If everything in the market is always a buy, if you are one of the top tip ranks analysts here on this website, why are you not issuing out any sell ratings? Why is your price target now dwindled from what it was back in February 2021 at $185? And now you have it at 140, which now equates to 359% movement higher. Take a look at this. Even here, you guys, a lot of these comments also shows you what the majority of the people think about this video, right? So let's take a look. So you guys can see right here, the first comment, I love videos like these where you actually break down the numbers, the fundamentals, and just give your thoughts all out. Thank you for what you do, Tom. Cool, right? I get it. He's a fundamental analysis. He looks at the numbers. He looks at the earnings. Like I said, he said that this particular company had a phenomenal quarter. I get it. But what do you do when the price still comes down? What do you do when your fundamental analysis doesn't pan out? Look at this comment. Thanks for the video, Tom. It would be good if you did an occasional video where you got predictions wrong. But more importantly, do a full analysis where errors were made so we can learn together how we can improve our decision making when we choose to invest in a company. There is no analyst that gets everything prediction or get all the predictions correct, which is why I appreciate the transparency. Did he come back and do a video on Peloton to say where he got this wrong? Because one thing about fundamental analysis, it always portrays the good of the company, right? And one thing about fundamental analysis, you cannot get a price target from your information. You can't do it. It's hypothetical. It's your opinion as to where you think the price is going to go. Now, you might run a couple of formulations, a couple of formulas, a couple of calculations to try to determine what the stock is worth. But as shown you in the screenshot, when Tom said that they had a phenomenal quarter in Peloton, the stock still dipped 7.25%. That should not be the case if the market truly was good, right? No, it shouldn't. So now ask yourself the question, what happened since then? Here we are, about to go of 12 months into when this video was posted on YouTube. Let's see what the majority of the people are talking about now. Let's go to the newest comments first. Now look at it. This was a month ago. Hi, Tom. It will be interesting to analyze this stock again. Okay. Tom, please explain what the hell happened to Peloton and what is your advice to do next? 2 months ago. Here go another one. What do you feel now? 2 months ago. This aged well. Curious to see an update after today's bleeding 2 months ago. 3 months ago. Look at this. Oh dear. Somebody even left a comment 4 months ago. Peloton probably is worth $5 to $10 now. 6 months ago. Hi, Tom. Is it still undervalued as of today? Somebody even wrote 8 months ago, laughing my ass off. You can delete this video now. So apparently, by him not responding to these comments, he has not done a revision as to what really happened in Peloton, right? You come through, you do a video, you say it's undervalued, you say that it's a buy, you're expecting the price to go up, but then it doesn't. And then at the end, they always give you this caveat right here. This is strictly my opinion. So do your own research and make up your own mind. This is not financial advice, just entertainment. What's so funny about this, right? What's so funny about you coming through stating that you're looking for a price to go up, and when you look at the price chart, it goes down? What's so funny about this? What is there to be entertained about? And I will state that many people who watch this video, out of what, 34,000 views, they utilize his information as their research, right? If you go ahead and go through this video, you guys will see that he goes through the books. He goes through the balance sheet. He goes through the income statement, the financial statements throughout this video, right? Look at it. He shows you the basis as to why he thinks Peloton is a buy. Look at this. He's going through the income statement. All right. So can you not equate your due diligence, your research to go along with his? Yes, you can. Right? Take a look. Cash flow from investing activities, operating expenses, and income, earnings from contributions, even goes through the founding, the leaders of the company. He even goes into the EBITDA. He even gives you a long-term forecast as to what Peloton's going to be worth in the future. Now look at this. This whole spreadsheet is garbage now because the price is exceedingly less than what it is back in February, than what it was back in February, right? All these numbers mean anything. It doesn't mean anything no more because these numbers were based off where price was back in February. Okay, look at this. So he was looking for a price target of about $183, right? $183. He was looking for Peloton to go when it's around 146, right? So now let's take a look at this. Look at the chart. This video was posted to YouTube on February the 5th, right? So let's take a look at this. So from February the 5th, if you were to put a buy into the market in Peloton, right? On February the 5th to where the price is now, you will be down around 80%, 80.25%, right? Yes, you'll be down. Okay. Now, in order for you just to break even, take a look at this. We would have to see Peloton increase in value just to break even 400% from where price is now. Yeah. What happened? Why didn't your fundamental analysis show you that the price in Peloton was due to come down? Sometimes you got to equate the strategies that you utilize. Is it really worth it? Am I utilizing the best strategy? Because fundamental analysis tries to show you the good of the company to justify why price should go up. Fundamental analysis don't give you, okay, this is the value of the stock going down. Or possibly it does. People just don't want to use it that way though. Maybe they need to, because based off of what was said on this video, right? Based off what Jason Hefstein said or recommended on his rankings for Peloton, something has to give. Something is not right in the strategy that you're utilizing when you try to base your predictions, your analysis off of fundamentals. You got to question these things. So now, seeing that Peloton is trading around $30 now, what is your fundamental analysis now? What is your price target now in Peloton? That's the question that needs to be asked to Tom Nash. What is your newest price target? It's nothing about bashing. It's nothing about getting it wrong. It's about, okay, cool. If you was looking for the price to go up, it didn't go up. So what are you seeing now? What is your fundamental analysis telling you now? Because many of you possibly saw that video back in February, and based off the comments, some of you are looking for an update. Well, we're not seeing that yet. So I just wanted to come through, give you all a little historical look back at some of these picks that these YouTubers are doing, right? Someone needs to come in and evaluate whether or not these YouTubers are picking good stocks, right? Just like Tom did for Jason. He came back and looked at his prior recommendations of Peloton, and back then it looked good, but today it don't look good. This is all I'm doing. I'm just coming back, looking at these YouTubers, see if they're giving us any good plays. Are they actually picking some very good stocks? And this is just one of them that didn't play out right. That's all. So now the question is, what is the best way for you to win into the market? Now, from this particular channel, from my standpoint, the only thing that matters is this. It's the price. Nothing else on this chart matters. Nothing else in terms of fundamental analysis, earnings statements, balance sheets, earnings per share, EBITDA, none of that matters. The only thing that matters is what people, algorithms, are doing with every share of stock that they possess. Are they selling it? Are they buying it? That's the only thing that matters. And that is why I only give you the chart. I don't focus on anything else but the chart. So now, if you feel that Tom has the best strategy for you, kudos, hats off to you, wish you all the best. If you see that there's a better way, i.e. what I do, then you come on over here, hit that like button, share the video, and also subscribe to the channel. I'm gonna give you all an easier way, an easier approach to seeing how this game is really played. You won't be shaking your head and scratching your head trying to figure out, okay, if Peloton had a phenomenal quarter, why did the price go down? I mean, take a look. Since that phenomenal quarter in Peloton, price has came down massively. That's because the market doesn't care about those phenomenal quarters. You perceive it to be phenomenal, but overall, the price is telling you that it wasn't phenomenal, obviously. So now, keep it locked in here. I'm going to give you all more of these lookout videos from these YouTubers. If you guys know of anyone that has made a price prediction that kind of looks funny, that didn't go the way that you really expected it to go, shoot me an email, let me know so I could go ahead and take a look at it, and we could come back in and break it and do, a review of it to see what really happened into the market. All right, now I'm done. Make sure you maintain the profitability, and as always, trade different.